Aloha, Inspired Moneymaker. Welcome back to Inspired Money, where we talk money, motivation, and meaning so you can live a richer life. A little bit of a hiccup in that intro, but I'm glad that we got the correction in there. I'm Andy Wong. Today, we're diving into something really big. Bitcoin and digital currencies in your retirement account. Yes, you heard that right. Owning crypto inside an IRA or 401k. I'm not telling you to do it or not to do it. Everybody has different goals, investment objectives, and tolerance to risk. What we can do is learn about this together so that we can make smart, informed choices about our retirement savings and investments. With the current administration signaling a more pro-crypto stance and new legislation shaping the future of digital assets, now is a great time to understand how cryptocurrency could fit into your retirement plan. That's why I sat down with Chris Kline, co-founder and chief operating officer of BitcoinIRA, the first platform that lets you hold crypto like Bitcoin directly in your tax-advantaged retirement accounts. We're going to talk about what this shift means, how a Roth IRA could make your gains tax-free, and what you need to know before jumping in. Now, this episode is a little different than most. Not only is it a one-on-one episode, but I had the opportunity to visit iHeartMedia's New York City headquarters. It was a really cool opportunity to peer into the studio where Elvis Duran and the Morning Show broadcast from every day. There were posters of legendary recording artists everywhere. It was a fun and unique adventure for me to get out of my home studio and into a professional radio station. Now, we're going to find out why Chris believes this is just the beginning of a financial revolution. So stick around. You're going to get insights you won't hear anywhere else. Before we dive in, a quick thank you to our sponsor, my fee-only registered investment advisory firm, Runnymede Capital Management. Do you ever feel like you're saving enough? Or do you wonder if you're saving enough to retire? Or if you might run out of money too soon? It's a scary thought. But most people don't have a clear plan, and that uncertainty only grows as the years go by. At Runnymede Capital Management, we've been helping families turn that anxiety into confidence for over 32 years. Now you can get your own 3-minute financial plan at runnymede.com/getplan. In just minutes, you'll see exactly when you can retire, how to boost your income, cut debt, and protect your family's future. It's completely free. Stop guessing, start planning. Visit runnymede.com/getplan to get planned today. Now, our guest for this episode is Chris Kline. I mentioned he's the co-founder and COO of BitcoinIRA, the first company to let investors hold cryptocurrencies directly in their retirement accounts. Since launching in 2016, he's expanded the platform beyond Bitcoin, built a secure and compliant system, and helped make BitcoinIRA a leader in crypto retirement investing. So let's get right into the interview with Chris Kline. Chris, welcome to Inspired Money.
Thanks for having me today, Andy. It's a pleasure to be here.
You are an OG in this crypto space. Can you take us back? What led you from a more traditional finance job into launching Bitcoin IRA?
Absolutely. Well, I've never really been much of a traditional guy. When I first jumped into the world of self-directed IRAs, it was about real estate, precious metals, LLCs, venture capital, private equity. And then the challenge came across our desk, my partners and I, is it possible to put Bitcoin into a retirement account? And at that time, it hadn't been done. So I had to take the orange pill, go down that rabbit hole, so to speak, and really dive into what are the fundamentals of crypto. And really, after reading the white paper a couple of times, and there were a few key pieces where I just fell in love as an 80s baby and watching this plethora of abundance and monetary supply, it just spoke right to my soul.
Always alternatives, and
just more alternative every step of the way, I guess, more cutting edge.
Yeah, so if you take us back to 10 years ago, 12 years ago, what did you see as this potential evolution of money?
Absolutely. For me, the white paper, what really sung off the pages for me was the halving concept. The idea that there's a fixed supply, a scarcity of Bitcoin really spoke to me, and the instrument by which it was put in place in order for us to avoid that, or avoid what we have today with the U.S. dollar and fiat currency, is that we actually are taking away the reward for the producers of it, and to go from 50 down to 25, down to, like, the steps we've taken. Every time there's a halving, it makes me feel better about the next generation, my kids and their kids, that there'll be sound money available, because I grew up in the 80s, where basically from 71, the Nixon shock, when we went off the gold standard, it's just been print as fast as you can through crisis, and that eventually there's a day of reckoning for that at some point. I don't know if I'll be alive for it, maybe I will be, but you can't print something to oblivion. I think the Romans taught us that, and several others have taught us that's the fall of civilization.
So you got in early. We're in this world of wanting instant gratification, like things need to happen right now. Looking back, were there times where you felt like, I am too early? What am I doing?
Yeah, so our first little quick story, our first client was the former director of the United States Mint, Edmund C. Moy. He was a friend of ours from working in the precious metal space. And I called him and I said, hey, we're doing something really innovative over here. Would you like to try this out? And he's like, yeah, I'd love to be the first person to have Bitcoin in an IRA, which is kind of funny because arguably this was in 2008, 2009, he created the most amount of monetary supply in the history of the US dollar. So for somebody that was responsible at the Mint to watch that happen and then to go and grab sound money or alternative format of money to put it in, I thought that was pretty unique. And Bitcoin was $250 a unit at that moment in time. And so I remember, and then, the tree falls in the woods and is there nobody there to hear it? Did you really do something? For those first 6 months, I was dubious. I'm like, is this really going to catch traction? Are we really going to get there? And then that first full years of business, 2017, Bitcoin went from $1,000 to $20,000. And I was like, okay, maybe we did something great. And then within 30 days, I was like, obviously crying again, because that was the fall from 20 back down to 6,000. So it really, that was before that was when my first gray hairs came out, was those moments. And there's been, you're never too early, and also you're never too late. I think that's the big conversation a lot of folks are having about Bitcoin now is, oh, I missed out. I think that's crazy. We're still only at 3 to 5% mainstream adoption at this juncture. There's so much that's happened in the last couple of weeks with Crypto Week and the legislation that's going to supercharge this cycle, and you're nowhere near being too late. So I never really thought I was too early. I just said, you have those look in the mirror moments is, can you get through this? You got your great years, and then you got your really, the bear markets. I always tell everybody on my team when we're having good times like right now is winter is always coming. Because that's the nature of this beast. It's a very volatile, cyclical product.
It's very, very seasonal.
Yes.
So combining cryptocurrency with an IRA, that was really novel to come up with that idea. Really a first of its kind move back in 2015. What gave you the conviction to build this? And how did you overcome early skepticism?
Yeah, right away there was you're talking about Bitcoin, and now you want to put it in retirement? Are you crazy? And that was I think what was awesome was our early adopters were, I call them my engine nerds. They were retired Intel, IBM, NASA scientists, and they were on the cutting edge of technology, and so they kind of made me feel better about it. Like there was so much enthusiasm. We would put a press release out, or there'd be a Reddit thread, and then the phones would ring for weeks. And there was a moment in time where a group from Agora Financial, Bonner and Partners, we had no relationship with them, and they went and they opened an account and then did a full 10-page expose on us. And I came in late to the office that day because I had a dentist appointment, and everybody, we only had 8, 9 people at that time on staff, they all pop up from their cubes and they're like, Chris, we have a problem. And I said, what's wrong? The phone hasn't stopped ringing for the last 3 hours, and it didn't stop ringing for 3 weeks. And that's when I said, okay, wait a minute, we're really at the cutting edge of something unique here that people are enthusiastic about. So that kind of gives you that strength. What really, for me, was I think we have a retirement crisis in America. And that's why I was in alternatives to begin with, was just trying to seek for a way to really fulfill our mission as partners and as a business, was to help more Americans retire. We have a big mess. Whether you're just about to retire, are you going to last? Is your money going to last as long as you do? And for my generation and the younger generations, that's not something they're even thinking about yet, because between student loan bills, housing payments, rising costs, it's the last thing you think of. we're more of a gig economy today than ever before. So a lot of people aren't working with corporations that have 401ks or pensions. And even big corporations are starting to cut back on those because they need to tighten the belts with other expenses. So in collection, you've got a society that right before COVID, Northwest Mutual asked a series of people, how much do you think you need to retire comfortably? And the number was 500,000. This was 2018, 2019. They just resurveyed the same people. It's jumped to 1.8 million now in just a short 5 years. And where's going to be in another 5 or another 5 after that? Everything is rising in cost. So it really helps me every day to know that we've changed a lot of people's lives that have gotten in early, whether they didn't think they could ever retire or they had to come out of retirement because they took a big hit in 08, 09 with the housing crisis, to give them something that they bet on, and it's changed their retirement future.
Yeah, definitely retirement readiness in the United States is a constant challenge.
Yeah.
And a part of that, I think, is financial literacy. Not teaching kids in school what is the power of compounding.
Yep.
Why is it important to invest your money?
I was in elementary school in Colorado, Denver, Colorado, and we had this thing called a Maritime. And they basically let us run a city for a day, and we prep for it for weeks. And part of it was, there's a bank and there's a city hall and there's these things. And I ended up running for mayor, but I lost, and then I became the reporter. And then I tried to do a story about the mayor doing something fraudulent. And this is a 5th grader, just having fun, just understanding the politics. But the banking piece, all they taught us how to do for a week was to write a check. And I don't know about you, but I haven't written a check in years. I mean, it's a very rare thing, except for maybe like if you move into a new place, you got to put a security deposit down or something. That's what they like. But that world is so antique now. And I think financial literacy is a huge gap we have. You don't learn things. I even went to University of Colorado Boulder Business School, and they don't dive into business taxes and those things like P&Ls, EBITDAs very heavily. You spend all this time on these accounting equations that you just want to forget by the time the semester ends, but never really the core elements of running a business and the treasury of it, and then your own personal. And it's just something that we skip. And it's everybody. It's not just Gen Zs or millennials with their avocado toast and their coffee. It's across the spectrum of people that just don't have that literacy. I try to make it a personal goal. My daughter's 11, and when she was in TK, I went to her school. The teacher asked me, because she knew I was into Bitcoin, she said, "Could you come teach the kids about Bitcoin?" I'm like kindergartners? And it was great, because I said, probably going to be easier than teaching a room full of adults about it back then. So what I did was, every one of those preschools has that Fisher Price store in there. And so that was Izzy's store. And she ran the store, and then I had 4 kids volunteer. I dressed one up with a caveman outfit, one as a Roman soldier, another one just modern day like us, and then a 4th one in an astronaut uniform. And then I gave the caveman a rubber chicken and a rock, and he went to the store and he bartered and traded. So they understood, okay, back in caveman days, that's how money worked. Then I gave a silver coin to the Roman soldier. I gave $20 to the kid that was modern, which, by the way, he pocketed that $20. Never got it back from him.
Smart kid.
Yeah, I know, smart kid. Hopefully he bought some Bitcoin with it. And then the astronaut, I had him use my cell phone, my Coinbase, to make a transaction. And did the kids understand it, or they just think it was fun? Who knows? Maybe one of them will grow up and say, "I remember the day I learned about Bitcoin in TK." That'd be awesome. But and then I remember the homework came for last year, and they were talking about pennies, dimes, quarters, nickels, because it's fractions, right? They're trying to teach kids fractions of money. And I wrote this little manifesto at the bottom of the report with the teacher. It was like, I think you forgot the most important coin, especially since they're going to basically stop making pennies soon. It costs more to make them than they're worth. So you need more advocates out there teaching it, but also people have to be open to it. I think it's one of those things that scares them, so they just avoid it. It's an avoidance thing. It's like, well, I don't understand it, so I guess I'll just be ignorant when it comes to money. And that's what keeps us from really prospering, and why you need channels like yours and to get people to think beyond the basics of money.
With hindsight being 2020, I suspect that the home run story is, if you can invest your money in a Roth IRA, and you could have bought Bitcoin at $500, and now it's over 100,000. You grew your money tax-free.
Yep.
Huge.
Absolutely.
Right? But you cited the 3 to 4%, I think, of retail investors who have crypto exposure.
Yep.
You still feel like, even today, very early innings in this baseball game.
Yeah, very early innings. And it's going to take pricing to get to a certain point, because people are driven by one of two things: fear or greed. And when the price of Bitcoin maybe gets to 130, 135, the retail wave will wake up, and the institutions are thrilled right now that the retail buyers aren't here yet, because they're being able to buy Bitcoin cheaper than they may have to in 6 to 7 or 8 months. Hindsight 2020. The William Roth, 1970s, created the Roth force from the fine state of Delaware and put it up as a senator in legislation. And back then it was because we had a savings crisis in America as well. People just weren't saving money, so they wanted to incentivize. What a great tool, especially if you really believe in the ultimate growth of your assets, to have it in a tax-free, tax-deferred setting. And then when you hit that ripe age of retirement, to take $500 and turn it into $5 million and be able to take those distributions out tax-free. That's what Peter Thiel's doing. That's what the big money's doing when they're betting on something big and that they believe in. And this administration and this government today is kind of inkling towards bet on alternatives. If you're reading between the lines, a lot of conversation about Bitcoin, a lot of conversation about gold, and a lot of, I think, acceptance that we've gone past the point of no return when it comes to the dollar. And if Americans are listening, they should take measures today to start protecting themselves and their wealth.
So in the Roth, really helpful to have an asset that can appreciate in a big way.
Yeah.
What do you tell people as far as allocation? How much exposure should they have to Bitcoin and other digital currencies?
I mean, it really comes down to their individual risk tolerance, obviously. This is self-directed. So we usually see most folks, I know Fidelity came out with a suggestion of 1 to 3% a few years back. They've just jumped that to 5 to 7. We've seen most people somewhere in that range between 1 to 7%, but you have the people that went all in. So one of those early engine nerds that I was talking about, he actually left his job at Intel so that he could liberate his 401k. Because, if you're still working and you're under 59 and a half, your 401k is kind of locked in until you either leave or if you reach that age of rollover capacity. He literally left his job so that he could get his 401k liberated and put it all into Bitcoin. And I remember having the conversations with him. This was 2016. I was terrified because coming in gung ho, and now obviously retired young and early and enjoying life with his family. But I think getting the bigger risk is not getting off zero. If you don't get off zero, if you haven't at least gotten some exposure to Bitcoin, you have your contribution for the year. You don't have to wait till tax day to do it. You can do it at any time. Grab $1,000 or up to $8,000 if you're over 50, and get off zero. Get some exposure to Bitcoin. It's never too late, and your future self will thank you drastically.
So, Chris, we have options today. We can buy Bitcoin ETFs, right? Many people say it's about time, but we have the option. We can buy those ETFs in our IRA account. Tell us about the idea of Bitcoin IRA. How does it work? How does it work compared to buying crypto directly on an exchange or versus buying it in an ETF?
So, a great question. Obviously, there's direct investment here. So instead of getting, I like to kind of call it a proxy certificate when it comes to ETFs, it's still a paper-derived asset, which is based in dollars. Right now, there's 1-to-1 ratios. That will likely change. ETFs always start with 1-to-1 of their exposure, but as they grow, you'll start seeing fractionalization of that. Beyond that, they're limited for their trading time periods. 90% of our trades, and we are at a $14 billion of assets under custody, and I think just about $4 billion of transactions lifetime. You have 90% of those trades have taken place after business hours or on weekends. So this is an asset class that runs 24/7, 365. So those are two big reasons. For me, it's when I reach that age of distribution, when I get old, I won't have to sell my crypto or Bitcoin for dirty dollars to take it out of my retirement. I can do what's known as an in-kind distribution and take the Bitcoin itself and move it to my private wallet outside of my IRA. So an ETF IRA versus a crypto IRA, those are some definite differentials. Now, how is it different than an exchange? Well, the tax thing we were just talking about. If you put it into an IRA setting, you're going to get the benefit of putting it in a traditional, the benefit of tax-free distributions with a Roth, and in between, if you're just a Bitcoin guy or gal and you're going to do just a maximal buy and hodl strategy, lots of folks end up doing some trades along the way. Even if their mentality is there, they'll dabble in some Ethereum or some of the other altcoins, especially when they start taking off. We have alt season coming up. When you trade anytime outside of an IRA, you have a capital gains implication. You bought something for A and you sold it for B. Even if you swap between coins, a lot of people don't realize that. And most folks that are outside of an IRA with their Bitcoin don't realize that they have somewhere between 15 to 25% less Bitcoin than they think they do, because at some point you're going to have to ante up to Uncle Sam. And if it's years from now, I think we've only seen taxes go up. Even with friendly administrations, the pendulum swings and then it swings back the other way. And if I'm thinking, I just turned 40 this year, if I'm thinking by 40-year strategy, who knows where taxes are going to be at that moment in time. So that's the advantage of getting off exchange. There's also some nice things. We have a lot of clients that do not just their IRA with us, but then they'll open up a non-IRA account because of the additional securities. So our platform, all wallets are insured for up to $250 million. And you can set up your beneficiaries. So unless you could be pretty smart, set up a ledger device and have your seed and take all those steps to hold my keys and hold my crypto. But what we allow is, I just flew here from Phoenix, and if something happened and the plane and I wasn't, my wife and kid are set up as beneficiaries to my Bitcoin accounts, not just my IRA, so that it's an easy transfer for them to have those coins put under their name, as opposed to they have to dig through my desk drawer and look for the seed, and I've never trained them on how to use a ledger. Like, those are things that's I think what helped, it stalled out mainstream adoption for a bit. It's not an easy thing to use. It's not like when we launched credit cards. It was pretty, it was scary to people. My favorite thing I've seen, have you seen the story? It's like 1980s Texas, and they're sitting at a Burger King, and a reporter sitting there asking people, it's the first day Burger King's accepting credit cards. And there's these guys sitting there, I don't need no credit card. I got cold hard cash in my pocket. I don't need it. And look at where we're at today. And that's just in my lifetime. Where are we going to be in the future with digital payments and these types of things? And that adoption is going to take some time. So yeah, I hope that's a little long-winded, but I hope that answered some of those questions for you.
Yeah, talk about the Pentagon of Custody when it comes to security.
So the Pentagon, why I named it that is, it was designed to be a building that was safe from attack, right? And the way they design it, if you've ever been there or know folks that have been there, is that the Joint Chiefs of Staff, the big guys, the 5-star generals, their offices are all at the center of the Pentagon, on that interior ring. I think it's A through E is how they're labeled. So they're at the center ring for an ultimate protection. That's how we treat your nest egg of Bitcoin, is we put it at the center and then we put these rings of protection. So the first ring is we use multi-signature exclusive wallets with BitGo, which BitGo is kind of like the Brinks brand of the crypto space. We built the first multi-signature for custody with IRAs with Mike Belshie and his team out of Palo Alto back in 2015. That was one of the check boxes I had to do to make this reality, is, oh, well, how are we going to hold this in a traditional sense where there's custody? That allows where there's multiple keys, they're geographically dispersed. I call them salt and peppered, but they're obfuscated, that's such a hard word to say. But they're broken apart and then they're encrypted. And then we have a layer of consensus around that, so that internally it takes 8 different people in order for crypto to move in or out of wallets. That's one layer. The next layer is we try to protect you from yourself. You're your weakest link when it comes to anything digital. We all heard the horror stories. I got SIM swapped. My email got hacked and they emptied out my Coinbase account or my Kraken or otherwise. And those things are getting more and more sophisticated. The spear phishing, it's not just some Nigerian prince that's calling you that says that you need money to grandma. They're getting good, and with AI, they're going to get even better. So we have this layer of AI identity verification, and we'll actually, if you're going to move crypto out of your IRA, you have to sit down on a Zoom call and do a video verification and likeness read and answer a series of questions before anything can move. And then those have to be moved through a protocol of whitelisting, micro testing, and TXID verification. So each of these is a ring, a layer around that Pentagon to protect your nest egg from things that could go wrong in typical services, and then your own self. Also, last piece on that Pentagon, none of our trades are done on exchange. So if you were to go buy at Coinbase or Kraken, you've got to take your cash, put it on the exchange, and then buy and sell what you want. And then, yes, you can move it to cold storage, which is a step that a lot of people forget. And if they get access to your phone, within instance, they're already searching, does he have a Coinbase account, and can I move it to a private wallet and drain that account? none of our trades they all happen on OTC markets. So while you're in the app, you will see, oh, I just bought Bitcoin and instantly settled. Behind the scenes is where all the secure cold storage to cold storage settlements happening. This was another added benefit of our configuration that got us approved for the insurance and all the extra layers. So does that help understand that Pentagon visualization?
Yeah, it's technical. So you guys, it's well thought out.
Yes, absolutely. Well, 10 years in the making.
And tested.
Yeah, and we never stop. So security today as financial services is not something that you just check a box, oh, I'm SOC 2, Type 2 rated. Like, it's not something like that, especially in crypto. New threats are constantly there. So we actually take a chunk of about 20% of our quarterly roadmap for our technology and product teams is dedicated to additional security things. More pen testing, more authentication add-ons, more AI, all the tools. So so if you look at our roadmap, 80% of it's new product and 20% is keeping the product we have safe. And it's an ongoing, never stops. We've been doing that since 2018 as a standard.
So it's evolving.
Yep.
Let's take a step back. Since you started your career in real estate, gold, commodities, why do you advocate that retirees, or I guess even before retiring, when you're saving your retirement nest egg, why is it important to have alternatives in there? And then are digital assets the same or different?
Good questions. So first part, why alternatives? It's not our grandfather's economy. So my grandfather passed in 2020, he lived to about 92, and he had a pension working for here in Walker, and he basically could buy, and he taught me a lot when I was a kid, but he could buy GE and a handful of other stocks, and pretty much they went up over time, and he lived off dividends, was his structure. Unfortunately, the world's not that easy anymore, and there's so many challenges we have to overcome with inflation, rising cost. Ever since we went off the gold standard, almost everything, all charts are up and to the right, and they don't seem to be. We have to go to a deflationary state in order for prices to come down, which won't happen. A lot of folks will put most of their net worth inside their primary residence. Housing, while it has its value, it goes up. It doesn't go up all the time, as we learned in 2008, 2009, but it also has quite a bit of expenses to it as well. You've got to maintain the house. If you're renting it out, you've got renter issues. It's not that as easy as I buy a house and I make wealth, but it's a piece of that alternative. So the modern portfolio theory, in my opinion, has the stocks and the bonds. They still are important. You need your fixed income, but there's got to be a segment, and some people it's up to a third, others it's down to like 15, 20%, but a piece of that pie that's dedicated to the things you're not finding that are on paper. Gold is great for it. I've worked, and we actually have a digital gold that's on our platform that you can buy, and it's real gold coins and bars at a depository, but it's got a blockchain over the top of it, so it can trade and settle instantly and swap with other digital assets. I think that you're going to see more of those alternatives get into this real world tokenization, real world assets being tokenized across the next few years. And then you've got a whole secondary market. Now you can take your rental property and you can get some liquidity out of it by tokenizing it. And not to go too far down a rabbit, this is really exciting stuff that I think there's a lot of really smart guys in our space that are going to launch some of these things in the coming probably 18 months that are going to change these assets that sit kind of just, they're great assets, but they kind of languish. There's no way to basically financialize them. They're just there for that reason. And that's where we're headed next. So there's going to be this kind of marriage of the two.
Can common stocks be tokenized in the entire stock exchange as we know it? Completely change?
I think it could. It's going to start with stablecoins. The stablecoins from the Genius Act, and last week I was sitting down with a bunch of big bankers in boardrooms across the country, and that's the big thing they're talking about right now. They all want to figure out how can they compete in the stablecoin space. They see it as the next, where there's going to be a lot of AUC and AUM that's going to aggregate in those spaces. But they're thinking of it, and I didn't think of it like this. They're thinking of it as competing against each other for who's got the best stablecoin. I don't know if that's really the race that we have. You have a race to reserve with Bitcoin, countries, nation states, and companies, and now you're going to have this kind of race to compete in the stablecoin market. I think stablecoins are great because they will lead to the tokenization of stocks and others, whereas instant settlement and liquidity issues can be handled on-chain through these mechanisms. That's the institution win for stablecoins. The retail win, or the small business win for stablecoins, is the elimination of money service providers, merchant service providers, credit card processors. Because if you're settling with stablecoins, you don't need all of those extra layers, those middlemen, which would lower costs for the retail user. And the business could also, if they're going to take payment in stable, then they could easily flip and take a piece of it and put it in treasury as Bitcoin, which I think is the new big thing. Is we got big corporations that are putting it on the balance sheet. Small businesses are going to start doing it as well, just as a hedge and hey, I had a good year. I made $5 million EBITDA. I should at least take $1 million of that and put it long term and help grow the business and the balance sheet for those rainy days that might come in the future. Because businesses, they all ebb and flow, right?
So stable coins, good for the dollar or bad for the US dollar?
Depends on where they get like their ping comes from. So obviously the natural beginnings is stablecoin is ping to US dollar, right? Will it change to stablecoins may be valued in Bitcoin or other digital assets in the future? As far as if you are a stablecoin issuer and what's your treasury look like? Is it first it's $1 to $1? If I'm going to issue a stablecoin and I'm going to have 1 million tokens out there, then I need to have $1 million in reserve. If at some point could that be instead of $1 million, could it be 10 Bitcoin that you have in reserve? And then that actually strengthens digital assets and alternative assets than the dollar. The dollar has done its damage to itself, and I don't know if there's no like U-turn. I think stablecoins will maybe give it a couple more, maybe a decade or so more of like fortitude in the space. Because it's tied to the dollar. Because it's tied to it.
But eventually, that connection
opens. Yeah, it opens the door to others. Kind of just like BRICS, for example, is I think BRICS, and if OPEC decides to stop having the reserve currency for OPEC be the US dollar, those are two very damaging things for the strength of the dollar globally. And we're kind of seeing some cracks. It's had its worst year ever, down 10% in a matter of like 30 days. So I know for years I felt like a doomsdayer. The dollar's coming down. And people just look at me like, who's this crazy guy? You feel like the homeless guy on the street corner saying the end is near. That's where I felt too early. Now with these, where people are seeing it, but Americans, average Joe, they're not sitting there saying, okay, I had $100,000 in my savings account, and now I have $90,000 in my savings account, because to them, they still log in, and there's $100,000 there. They don't quite understand that it now goes 10% further than it used to. And that brings us back to that financial literacy component, where understanding that the ability for your dollar to do something matters at strength relative to other currencies in the world. Ed Moy said to me a long time ago, Chris, the dollar is great, but it's just the cleanest dirty shirt and the dirty laundry hamper is really what it is. And that is, for most of my career, has driven me to say I can't depend on fiat currency for my long-term wealth.
Well, you've given us a lot to think about. And I think proof that when it comes to money, whether it's the greenbacks in our wallet or digital, we have to think about the macro and what's going on in the United States and in the world. Mm-hmm. Right? Everything's interconnected. Yep. And everything's we have to look for major trends ahead. And
the rest of the world is looking at crypto even stronger. I think with the Genius Act and the other bills that passed in Crypto Week, I think this is a place where the United States is going to cement its leadership in the digital revolution that's taking place. But it's going to be a competitive market. While the Chinese have banned it, there's still hash power happening out of the borders of China. So it's still being produced and mined over there. El Salvador completely jumped in with both feet. Which I think is a great case study. Argentina may be next, Zimbabwe. You see the number of wallets that are open during crisis. So when Turkey had its financial crisis a few years back, there was a slew of like a wave of new wallets for crypto that were open. While they've traditionally ran to gold and silver, crypto is easier to run to if you need to take money out and put it into a new form of money. So yeah, I think we've just begun this story, and we're going to look back in 20 years and go, wow, a lot has changed very quickly.
We'll see if it is indeed early innings in this baseball game, and how many innings there will be.
Yeah, it could be that record long one. What was it, 21 innings is the longest game? And by the way, Andy, just so before we leave each other today, a few things. One thing I'm really proud of with Bitcoin IRA is we're real crypto, real people. And what that means is we're not like a typical exchange where you just get to talk to robots and FAQs. We have a team of folks that help people like your audience open their account, fund their account, and inevitably trade their account, because retirement's not a one-size-fits-all solution. Everybody's got sometimes pensions, 401ks, so they need some assistance, some hand-holding to get to the finish line. So they can actually call, and this is a challenge I always put out there, you can be on the phone in about 90 seconds during business hours with a human if you call 877-936-7175. And be sure that they mention that they heard from Inspired Money, because we have a special for your audience. They can earn up to $1,000 in rewards for our Summer of Freedom program, Freedom of Money.
The Summer of Freedom of Money. Thanks so much, Chris.
Thanks for having me today.
My pleasure.
And good. Awesome.
Cool.
Thank you, man. That was
Thank
fun.
you.
Excellent.
Appreciate it. You
You've been
knew
doing a
Pentagon
lot
of
of these,
Custody.
so-
Well,
Well, what do you think about that conversation with Chris? And how did you like the iHeartRadio studio, especially with people walking around throughout the interview? Chris has got content creation down. As you can see, he has a videographer. He's got a videographer following him around a la Gary Vaynerchuk, so that he can repurpose the content that he filmed and made during his time in New York City. For me, I love doing an in-person interview. It had been a long time, and it's really nice to be sitting across from the person in the same room. This is not your grandfather's retirement. Longevity is a good problem to have, and one that we have discussed in previous Inspired Money episodes. I appreciated talking with Chris, who not only knows a lot about digital currencies, but he's also an advocate and very passionate about helping people increase their financial literacy. My favorite takeaway, he said the biggest risk is not getting off zero. And that hit home, because whether it's Bitcoin or any new asset class, the worst thing you can do is ignore it completely and hope the old ways will carry you into retirement. So I want to give you an assignment this week. Don't just listen, take action. Check your retirement accounts this week and see if you're truly diversified for the future that you want. Even if you start small, even if it's just learning, your future self will thank you. And if you want to have a clear, free snapshot of when you can retire, how to boost your income, cut debt, and protect your future, go to runningme.com/getplan. You can get your 3-minute financial plan. Just takes 3 minutes, and it could change the way that you look at your money. Remember, small steps can really create massive financial freedom tomorrow. So get started. If this episode sparked something in you, let us know in the comments or tag us online. I'd love to hear what you think about alternative assets and digital currency. Is it for you, or is it way too volatile and speculative? I think it's different for everybody. A shout out to the Inspired Money production team. Excellent coordination and edits by Bradley John Eaglefeather, graphic animations by Chad Lawrence. Finally, for more information about Chris, you heard him give out the phone number where you can call and talk to a real person. Also, go to BitcoinIRA.com for more information. And remember to mention Inspired Money. A few more thank yous before we part ways. Thank you to Josh Carey of the Hidden Entrepreneur Show for helping to schedule this interview and make it happen at iHeartRadio. A shout out to Adam Posner, who hosts the Pozcast. That's Pozcast, podcast with a Z instead of a D. Pozcast, Decoding Success. He interviewed Chris Kline in studio right after I did. So you can check out his show if you want to hear more from Chris Kline. Do not miss Inspired Money next week. We will be back with a guest panel once again. I think we're scheduled for Thursday, September 11th at 1 p.m. Eastern. I'm currently assembling a panel to continue this conversation. The topic is going to be the future of cryptocurrencies, exploring blockchain and digital assets. I think it's a timely conversation and one where we can benefit not only by talking to one-on-one experts, but a panel of experts. So please mark your calendar, check us out on YouTube, subscribe to the channel so that you don't miss upcoming episodes. We've got a lot of great topics and episodes in store. Until next time, that's next week, do something that scares you because that's where the magic happens. See you next time.